Ever feel like you're just stumbling around in the dark when you're looking at stock charts?
Yeah, it can definitely feel overwhelming sometimes.
Today, we're going to flip on the floodlights, reveal a technique that a lot of pro traders use.
Multiple time frames.
Exactly.
It's like having this, well, superpower, right?
Totally.
You can see the market's rhythm, both in the grand scheme of things, and then those moment-by-moment decisions.
Our deep dive today comes from an Investopedia article, and it uses a really relatable example, Bath and Body Works.
Who doesn't love a candle sale?
Right. But we're not sniffing out discounts here.
No, we're hunting for trading opportunities.
Exactly.
What's so fascinating about this whole multiple time frame approach is that it's not just about looking at more data, right? It's about understanding how different timelines tell different stories. So like a longer time frame, like your weekly or monthly chart, it smooths out all that daily noise.
Just like seeing the forest for the trees.
Exactly. It helps you see those overarching trends.
So it's less about getting distracted by every little price blip and more about seeing the currents, whether a stock is, generally favored by the market or not.
Exactly. Think of it like this. You wouldn't judge the success of a whole year just by like how much snow you got in December, would you? You'd look at the entire year's weather patterns.
Okay.
Longer time frames in trading, it's kind of similar.
That makes sense. But doesn't that mean you miss those short-term opportunities, the quick entries and exits that day traders love?
That's where those shorter time frames come in.
Oh, okay.
They're like zooming in on your map to like find the best route, say, through a really busy city.
Right.
You need that big picture, but you also need the street level view to navigate effectively.
So if the longer time frames are telling us about the overall sentiment, the market sentiment, what kind of insights can we get from those shorter time frames? So I'm talking daily or even hourly charts.
Those shorter time frames, they help you pinpoint those entry and exit points with way more precision.
I see.
Imagine a swing trader, somebody who's holding a stock for a few days, maybe a few weeks. They might use a weekly chart to spot a stock that's trending upwards, what we call a bullish signal.
Bullish. Okay, so meaning the market is optimistic about that stock, right?
Exactly.
Yeah.
So they're seeing that positive trend on the weekly chart, but
Yeah. But they don't just jump in right away.
not quite, no.
Yeah.
They might then zoom into the daily chart, see if they can find a dip in the price.
Okay.
That dip could be a really good entry point, a chance to buy before the stock potentially continues its upward climb.
They're timing their entry for maximum gain. So they're using that weekly chart for the overall trend, daily chart, to refine their timing.
Exactly. Playing the long game and the short game, using those different time frames to really paint a complete picture of the stock's potential.
And that brings us back to Bath and Body Works. What was it about their stock that caught the eye of someone using this multiple time frame approach? So this Investopedia article, it mentions that BBWI stock, it was in a bit of a slump after the holidays.
Yeah, makes sense, right? Everyone's all stocked up on candles by then.
Exactly.
But then, almost like clockwork, you start to see this little glimmer of hope on the weekly chart, like late November 2023.
Okay, so signs of a rebound starting?
Yeah, exactly.
But I'm guessing a seasoned trader wouldn't just buy based on that one chart, right?
You're catching on. They'd want to zoom in, get a closer look, maybe check out the daily chart.
Okay.
And guess what? That daily chart, it showed another bullish signal.
Wow, so two bullish hints. BBWI is starting to sound kind of interesting.
It was even pushing past what we call a resistance line.
A resistance line. Now that sounds like we're talking about trench warfare, not candles.
It does sound kind of dramatic, right? But picture this. It's like a line on the chart that the stock price keeps bumping up against, like it's hitting a ceiling, So when it breaks through that resistance line, that's usually seen as a really strong signal, like a sign of some real upward momentum.
So we've got two time frames, two bullish hints. BBWI is looking more and more appealing.
Right.
But we're not done yet, are we?
Nope.
There's that even shorter time frame to consider.
Exactly. For those really precise entry and exit points.
Got to get that timing down.
You got it. And this is where the article gets really interesting. It actually dives into the 4-hour chart, and it uses this thing called the KST indicator.
The KST indicator, that rings a bell, but maybe a little refresher wouldn't hurt.
Sure. So the KST indicator, it's all about measuring momentum, like gauging how much oomph the stock has to keep moving.
Got it.
In this case, with BBWI, the KST was really helpful. It helped to pinpoint some really nice entry and exit points.
So to recap, we started by spotting that potential upswing on the weekly chart, and we zoomed all the way in to fine-tuning our moves with the 4-hour chart.
Exactly. It's like using a telescope. right? You
Really?
scan the night sky looking for interesting constellations, and then boom, you switch to a microscope to analyze, the composition of a single star.
Wow, I like that analogy.
Each time frame, it's like a different level of magnification. It reveals something totally unique.
So we've seen how this works with BBWI, but how might someone listening, how might they apply this to other stocks or assets they're watching?
That's the beauty of it. It's super adaptable. It doesn't matter if you're into like tech stocks or commodities or even, cryptocurrencies. The principles are the same.
Interesting.
It's all about spotting those big picture trends and then, drilling down to find those perfect entry and exit points.
And what would you say are some of the key benefits of really mastering this multi-time frame analysis? I mean, it sounds pretty cool and organized, but I'm guessing it's more than that.
Oh, yeah, for sure. First off, it can lead to making, more informed trading decisions.
Which is key in this game.
Totally. You're not just like reacting to every little thing the market does. You're making these calculated moves based on a much deeper understanding of the what we call price action.
It's about having a strategy, not just, like you said, not just chasing every exciting blip on the radar.
Exactly, exactly. And, when you make smarter decisions, that can potentially lead to,
Newer profits.
yeah, because you're timing those entries and exits
Yeah.
more strategically. And we can't forget about risk management.
Right, because understanding that big picture can help you avoid those impulsive trades, the ones that might feel good in the moment, but then
Oh, yeah, could totally backfire.
exactly lead to some losses down the road.
Totally. It's like, imagine you're driving on this, like, winding mountain road, right? And you've got those guardrails,
Right.
multiple time frame analysis. It's kind of like having those guardrails for your trading.
I like that.
So you brought up, some really, really great points about the benefits, but we got to be real for a sec.
Okay.
This approach, it's not exactly like a walk in the park, is it?
You're right. It sounds incredibly powerful, but I can only imagine it takes some practice to get this down.
Oh, yeah.
You're looking at multiple charts, you're trying to synthesize all this information. It's a lot to handle.
It definitely has a learning curve. It's kind of like, learning to juggle.
Okay.
It takes time, it takes patience,
Okay.
and you're probably going to drop a few balls along the way.
And what about when those different time frames, what about when they're telling different stories?
Yeah, yeah.
Like, say the weekly chart is saying buy, 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 but then you look at the daily chart and it's like flashing all these warning signs.
Right. That can happen. That's where having that, that really a robust trading strategy, that's essential.
So it's like your rule book for when you get those conflicting signals.
Yeah, exactly.
Mhm.
Think of it like this. You got to decide which time frame you're going to prioritize. And that really depends on, your goals.
Your risk tolerance.
Exactly.
Okay.
Makes sense. So, for example, if you're someone whose strategy is all about, really focusing on those longer term trends, you might put more weight on like the weekly chart signals over what you're seeing on the daily chart.
Okay.
The key is have a plan, stick to it.
So for someone listening who's like, all right, I'm ready to dive into this whole multiple time frame thing, where do they even start?
Honestly,
Yeah.
I'd say start experimenting.
Okay.
Pick a stock,
Yeah.
something you're interested in, and just look at it through a bunch of different time frames. You got your daily, your weekly, maybe even try hourly.
See what patterns emerge.
Yeah, see what kind of jumps out at you.
So it's a journey.
It's totally a journey. And the cool thing is, there's no one right way to do it.
Right. It's about finding what works for you.
Exactly. Figure out what clicks. And you know what? There's a ton of resources out there if you need them.
Oh, yeah, for sure.
Books, articles, you name it. Just approach it with like an open mind,
Because this could really be a game changer for people.
Oh, absolutely. It's not just about reacting to those, to the ups and downs.
It's about seeing those deeper rhythms of the market and understanding what's really going on.
Yeah.
Well, on that note, we're going to wrap up this deep dive into the world of multiple time frame analysis. Until next time, everyone, happy trading.